as a non-profit organizations. It was promoted by the eminent financial experts and industry leader of India. More than 300 members joined hands for exchange of knowledge and experiences for the benefit and betterment of all stakeholders. The association pledged to standardize the working culture, to rebuild the funding architecture so as to bring in discipline and ethical practices for all the stakeholders of industry, either you consider as a banker, as a members, or as a lenders. All think we are pledged to give excellent services and as we follow the ethics. I think this is the main object of the associations. Government regulation affects the financial services industry in many ways, but the specific impact depend upon the nature of regulations. Increased regulations typically means a higher workload of financial professionals and as is challenged to adapt business practice that follow the new regulation correctly. The government play an influential roles of moderator between brokerage firm and client. Frequently up to date in regulation can affect innovation and cost of the industry, while too little can lead to mismanagement, corruption, and collapse. Due to this, it is difficult to determine the exact impact government regulations leave on the financial services sector. What that impact is more long lasting than expected. To be able to synchronize up with the new policies, each financial institution and professionals need to remain updated and how they can incorporate them in their functioning require expertise. Hence, they become experienced and know the ground level challenges. Hence, they gradually become a helpful support system for the policymaker of the government. Therefore, we propose to have a discussion session on the potential influence and role of financial advisors in improving the existing mechanisms of government policies. The mission of this conference, or to say webinar, is to highlight the roles of financial advisors in improving the mechanism government policies for financial industries, identifying practical solutions while discussing the key aspects of the process and present market scenarios to showcase the aspect that financial advisors should convey to the government authorities to find out definite solutions. This webinar will also provide a platform to the industry leader and financial professional to share their experience and suggestion in regard to the topic. Various topic has been highlighted in our agenda items. We have, I think, this webinar consists of 4 eminent speakers, namely CA Dr. Ashok Ajmera, founder of ISKCON Global Services Limited. We are with us Sri Ajay Vyas, Executive Director, UCO Bank. We are with us our most respected Sri Kishore Krat sir, who is ex-MD of Indian Bank and IDBI. We have with us CA Shri Ramesh Prabhu, Chairman Maharashtra Cooperative Welfare Associations. So we welcome all the eminent speakers, eminent personalities to discuss all the topics regarding the role of financial advisors in formulating government regulations. I think this is a more important aspect which we are talking about. Sir, this is our third webinar under this series for this year. Besides that, under the research banner, we conducted about 111 webinars in different subjects. Besides, the Researcher India is also knowledge partner of the ASSOCHAM, CIA, PhD Chamber, Indian Chamber of Commerce, where we are also holding so many webinars under this series. Either you talk about the restructuring of the loans, either you talk about the SME sector, infrastructure, all subjects we have touched it. So in our last two webinars, we have discussed the role of the financial advisor for the growth of the MSME sectors. And second topic we have discussed, why financial advisor is necessity. And that webinars, we are having with us Sri Chopra sir, who was the past president of the Chartered Account Associations. And I think all these participants appreciated his viewpoints regarding restructuring and also telling the restructuring scheme was ended by 31st December should also be extended to some extent. I will not take much time because all the eminent speaker had to speak. So first of all, I invited Senior Dr. Ashok Ajmera, founder Ajcon Global Services Limited. He is having a 35-year-old company engaged in the entire gamut of financial services. Dr. Ajmera was awarded Honorable Directorate in Financial Management by KLU, South Korea. Mr. Ajmera is international trainers, a TV guest speakers, having given more than 2,500 TV interviews on capital market and economy, possessing a vast experience of 45 years. We salute you, sir. Dr. Ajmera has served more than 500 corporate clients for their financial need as a project finance consultant and is known as expert in the financial solutions. He is recipient of Management Man of the Year Award. Thank you, sir. So much award you have got it. And Best Brand for ETH, Best Financial Consultant Award. Mr. Ajmera was Independent Director of Canara Securities, 100% subsidiary of Canara Bank, and a Special Executive Magistrate. I think, sir, has so much data. I think all the participants must appreciate your viewpoint, sir. So I am, you are an opening batsman for us. So I request you to please give your thoughts. How you feel that financial advisors, how they are helpful to the industry. And what is your feeling, sir? The role of financial advisor and proper recognitions by the government, whether you talk about the regulators or about the banker. I think these are the major issue in this area. When I have also come out with these financial services, so should be recognized by the banks, by the regulators, and by the government also. What is your opinion, sir? What are your thoughts on this process, sir?
Thank you. Thank you, Gupta, sir, for such a nice introduction of mine. Only thing, my wife has not joined this. Otherwise, she would have known that what am I, as compared to what she thinks. Anyway, sorry for my bad throat. So, we have to understand who is a financial advisor. And then only we come to the role of the financial advisor. Financial advisor is not that SEBI registered investment advisor or a financial planner or a DSA of some bank. A financial advisor is one who is advising his clients for his businesses, mainly the business, any business. It can be a small, tiny MSME, corporate, or any other client on his overall financial requirement, overall financial discipline, and overall financial controls. A financial advisor has to have some qualification. Like in case of a doctor, you should be minimum an MBBS. Not that everyone, just prints a visiting card and say, I am a financial advisor. He should be either a chartered accountant or that CFA or an MBA in finance. To possess certain qualification, and then this is aided with the experience, handling of some clients' businesses, dealing with the banks. And when you talk about the government, I take it as a government, regulators, banks, and financial intermediaries also, where the need for a financial advisor is there. So a financial advisor has to be a well qualified and experienced person. Then only he can give the financial solutions to his client. Now, why a financial advisor is required? A client is mainly there to take care of his business. Every individual, every industrialist, every businessman is not supposed to be himself a chartered accountant or a financially well qualified person, or may not be a technical person also, or may not be a marketing person also, but he is doing a business with the help of all these experts. So one of the experts outside is a financial advisor who combines right from sourcing of his material to the production, to the delivery, to the receipt of the money. And this is where he checks his cash flow, and where is the gap. He tries to find out and advise him accordingly how to fill this gap, or even in some cases, how to even improve the profitability. Now, in the olden times, there used to be very limited resources available. There was only 3 term lending all India level institutions. There were only 2 small state level institutions where you go for a term loan, like in Maharashtra, MSFC and CCOM, and there IDBI, ICICI and IFCI. And banks used to give only working capital, and that is also pure commercial banks. But now over the years, the whole market is increased, the whole horizon is increased, and many market intermediaries, financial intermediaries have come, which includes not only the commercial banks. Commercial banks have also become big term lending institutions. There are private equity players, there are venture fund players, there are fintech companies giving loan on the spot to you. So everywhere you need an advice of a financial advisor, that what a businessman should do, because without finance nothing can happen. Now, coming to the gap, because there was no difference between a broker and a financial consultant, people used to have a wrong impression of a financial advisor going to a bank and asking for a loan of his client for a commission, which is absolutely wrong perception. And that is where one has to differentiate between a broker and a financial advisor. A financial advisor helps the client preparing proper papers, assessing proper needs, which can meet the requirement of the bank, and plays a very crucial role by taking this client to a particular bank or a financial institution or a financial solution on a pure fee-based job, not related to how much money he is getting, not necessarily that if this much amount is given, then the fees will be this much. No, he is not a broker, he is a financial advisor. Yes, there can be benchmark on the level of the amounts overall, but not slab-wise, not something based on the full performance. He is helping them right from the beginning. So this is where the bankers, Ajay ji, Kharat Sahab is also there. I think they have come across many financial advisors in the past. Like us, I have been dealing with almost every bank for last almost 40 years now, 44 years. And I was welcomed by every bank. But then this is not the general scenario. People feel a consultant coming, and secondly, The fault goes with the consultants also. Because many a time the client doesn't know what kind of papers he has put in before the bank. He just, ask them what is their requirement, prepared the paper himself and submit it. So you have to take the client along with you. The client should know everything which is being prepared and asked for, all the term sheet conditions, and this is how only you can become a successful advisor and a consultant. And this is how you can get yourself recognized by these financial intermediaries, the banks and the other funders. Even in a case of a private equity, when you go with a client has to be along with you. Client has to be fully, you should be in the sync with the client and client should be in sync with you. This is what is very, very important, Gupta Sahab.
So very
this
nice,
is where our name is getting spoiled.
Sir, 45-year experience you have covered within a minute. I think this is a most, sir, major issue is to establish a credibility by the financial advisor. What do you suggest, sir? You already covered it. So, like, still what I feel it, when any financial consultant gone to the bank or some other institutions, they are feeling that they are a commission agent. Let me be very clear in that respect. So what type of credibility we should establish so that the banker should also understand that whatever proposal we are submitting to these people, that is a bankable proposal. We are not coming taking a rough paper or something like that. So what are your suggestions, sir?
You are absolutely right, Gupta Sahab, and for which I congratulate you for formation of this association, because we should ourselves have self-controls. We should have ethics. What kind of people we are enrolling in the association as a financial advisors? So number one, are they qualified? Do they know how to read the financial statements?
Sir.
Do they know themselves? Because making a clerk sit to prepare projections or Excel sheets or CMA data is a different matter. And understanding and analyzing it is a different matter. So you have to get yourself involved into the entire process to develop your credibility. When I go to a bank like even State Bank of India,
sir,
even the MD who is looking after the entire credit portfolio of State Bank, such a large bank, he also welcomes me. Because not only that, I'm just looking at the client's interest, I'm looking at the bank's interest also by bringing a proper client with the proper papers, proper requirement to a bank. Bank also wants business. And of course, one more thing in my case can be different is, over a period you build your credibility. I can tell you, out of 500 cases, not a single case of mine would have ever been tagged as a willful defaulter.
Oh, very nice.
There can be a default. There can be problems in the business. There can be problems in the business cycles. But you have to keep connection with the client. You have to take the client to the bank. You have to find out the solution. You have to prepare proper, after doing the assessment, you have to do your proposal. Either it is a OTS proposal or a restructuring proposal. So bank has confidence and faith in you that the clients which are coming through you is not that the day your sanction is done, you raise a bill, take the money and get out. No, your credibility is you enter into the shoes of the promoter. Your mandate should prescribe that at least for next 2 years, this fellow will keep sending you the reports in confidence, because everything is actually in confidence between a consultant or an advisor and a client. You have to put it in the mandate that you just cannot run away. You have to know what is going on. And this is why, though you do the less number of clients you service, you don't apply too many staffs just preparing papers, 3 sets, 5 sets, and sending it to 10 banks or 5 banks or 2 banks. That is not advisory services. That is like a DSA who is going for a retail loan or a housing loan, where he prepares 3 sets of file and send to 3 banks. That's a different thing. A financial advisor has to sit with the top promoters, with the top people, management people of the company. He has to have that kind of a confidence. They should have a confidence on him, understand the whole business, and then help them in preparing the paper, properly structuring their proposal, how much term loan they need, what is the short term, what is the long term, how the ratios will be maintained, how much fund-based facility they need, how much non-fund-based facility. And this is not the only role for a financial consultant. Entire running of the company, because ultimately the numbers, the accounting, properly timely data submissions, properly analyzed data submissions. And this is why I say on your initial talk that we are the people who can advise the regulators, the government, the banks, that what policy changes they should make, what our client needs, what a businessman needs. Like bank came out with so many proposals in COVID. Now, many of the clients were not aware of. And a wrong propaganda was spread that you avail the benefit of any of these schemes, you will be tagged forever that you have taken moratorium, so you are a bad client. That you have taken ECLGS, so you are a bad client. No, it was not like this. I talked to many bankers. Though they admitted that the client has a capacity, he should pay regularly instead of moratorium. But nobody said that if somebody has asked for the moratorium, means that his account has become bad in the eyes of the bank. No, it's not like that. So this all has to be explained to the client. His need has to be assessed. His cash flow has to be seen, that over a period of COVID, where he is having the problem, either supply side or the demand side, the administration side, the delivery side. So a financial advisor's role is a very, very broad. And let me tell you, when I meet a banker with a client or this thing, I tell them, sir, you ask me any question about this client, any product combination, import, export, domestically, where it is. And that is why a smaller team of a consultant will do. Because everybody should know the business of the client, should understand what are they are doing. One of my clients, during the COVID, their products were such big, large chemical company that the rates have gone up by about 50%. They have made huge profit during last 1.5 years. And accordingly, we told the banks, we don't need fund-based facility. We just need only non-fund-based facility for opening LC for the procurement of the material, which we are importing. So, this is where you have to build this is how you have to build your credibility. Over a period, right from the chairman of IDBI, GP Gupta, when he was a senior manager of IDBI in 1978, 79, 80, we have worked together for our clients with them. So credibility has to be built over a period of time. You have to maintain the ethics. You have to quote a proper fees for your job, and you should be limited to only fees. No other upside, downside. That if you make so much of money, you will give me so much. That is not a job of a financial advisor.
Sir, your conversation is
Gupta ji, you asked very important question. How to create the credibility of financial advisor?
Sir, you please, sir.
Sir, I'll tell you one thing.
वीडियो ऑन कर लीजिए सर, वीडियो ऑन कर लीजिए सर.
मेरा वीडियो का दिक्कत हो रही है वीडियो में, इसलिए
कोई बात नहीं सर. हाँ सर, बताइए सर. I think it's better.
The credibility issue is a very, very important issue which Ajmera ji has raised.
Sir,
I am a practicing banker right now.
sir.
I know how much the financial advisors are credible to us. 99% cases, or I say 90% cases, we don't trust financial advisors. There are very few people like Mr. Ajmera whom we can trust. Very few. They are fingertips.
Nice.
The reason is there is no transparency and there is no accountability. He is self-regulated man. Mr. Ajmera is self-regulated man. He is self-accountability. He fixed up his own accountability. But in other cases, there is no accountability. There is no regulatory guidelines in the role of the financial advisors.
Sir.
Though academically, lots of things are there, everything is there. But if you see in true sense, why there are only 4 companies in India who are giving financial advice to the government of India? Ministry of Finance and especially the Department of Financial Services is the guard for financial advisors. The major advisory is coming to that because they run the government. Absolutely. And most of the financial advisors are with these ministries only. And why there are limited number of advisors with the government of India? We can answer those things because they have created some credibility, some transparency have created. If you do not make these financial advisors accountable, why can't I have the name of the financial advisor in the process note? Tell me, why should we not have his name? Why should he not sign the papers?
Sir.
And why Reserve Bank of India don't regulate these things? If a company wants to hire a financial advisor, his name should be put in the process note. His name should come in everywhere. He should be authorized to sign the papers. He should sign an indemnity bond with the bank. In case the documents are not correct, then I am responsible for this. Nothing is happening of such thing.
Sir, that's why, sir, sir, that's why this association was formed.
Yeah.
To have some ethics of
Yeah.
the financial advisors. And
Yeah.
what is the role of the financial advisor, that we want to define it and putting their responsibility also on their financial advisors, sir.
Gupta, thank you for creating such a beautiful association.
Sir, that's why we are also feeling it that we should ask the Reserve Bank of India also and Government of India also to recognize the financial advisors.
Absolutely.
And also set some rules for the financial advisors. Ajmera
Yeah,
sir,
yeah.
you want to say something?
Yeah,
Ajmera
sir, you have really hit the nail on the head. You won't believe some of the top banks.
Yeah.
You know, the first thing where our proposal goes,
Yeah.
it goes with a letter of a client that this is what it is, and so has been appointed as our financial advisor and consultants
Yeah.
in this, and we are fully aware of whatever is being done, whatever is being submitted, or whatever is being spoken in the meeting with him. A similar kind of a language is there, number one. Number two, in many a time, we are tagged in those mails with the correspondence with the bank, with a client. Of course, all the time a client. No mail can directly go without missing the client. So the client has to be totally in the sync with whatever the correspondence or the papers which are being passed on from an advisor to a bank, and bank to back to the client. So, and yes, you are right. I mean, why can't a professional advisor, a financial advisor, can sign and say that whatever papers are being submitted in the proposal which is being handled by me as an advisor are absolutely true and correct?
Yes.
And I take full responsibility of it, because if the papers are wrong, he will not send it. He will not be a party to it.
Yes.
Of course, he cannot take any kind of a legal guarantee for the loan, but definitely responsibility for whatever has been put in on the paper has to be there of a financial advisor.
Ajmera ji, at least he can testify the documents submitted by the prospective borrower. He should say, at least say, yeah, I have seen the papers, I have seen the creditors, I have seen the debtors, I have seen the age of the debtors. He should certify all these things.
Absolutely. Otherwise, I take a TV report from Gupta ji.
Yeah.
And then,
also
then say that.
Sir, just I'm mentioning that international, when we are talking about these aspects, I just seen that international financial market, they recognize you can say, they are telling book runners, they are talking about the mandate lead manager, MLA, but they are talking about the lead managers, they are talking about the lead arrangers, they are talking about the participants.
No, in India, Gupta ji, in India also,
we should
Gupta ji, just a minute.
Sir.
In 1979,
Sir.
Reserve Bank came with a list of the project finance consultant.
Sir.
The list was there with IDBI, and the same list was followed by ICICI and IFCI, and Ajcon name was there.
So we can ask
as a project finance consultant.
We can ask request Sri Kishore Kharat sir. Sir, whether you say on this credibility something, sir? Kishore ji? Kishore sir. Hello.
Sir, unmute yourself.
Unmute kar lijiye, sir.
Okay, thank you.
You want to say something, sir?
Kharat sahab, namaskar. Kharat sahab, namaskar. Kharat sahab.
Namaskar.
Kaise hai aap? Kaise hai? Fine.
Yes, I am fine. I have actually I have put on other shoes. now.
How,
So
how
that also I will talk shortly. But I was listening to both of you, or rather all three of you, Ajmiraji and Vyasji.
Yeah.
Really, I'll tell you from the banker's perspective, first of all. We deal with the clients right from individual to proprietorship to partnership to private limited companies, large corporates. I can tell you for sure that every and each segment of our borrower, of our client, they need financial advisors. Whether he is an individual or whether he is a corporate client, because financial matters or financial affairs is a totally different ballgame together altogether. Secondly, there is always a different language spoken by the bankers and the different language understood by the borrowers or by the clients. Always, because we look from a different perspective insofar as funding is concerned. I don't blame the corporate clients, because if any corporate client keeps on engaging his time in the financial affairs and financial matters, then he will lose sight on the business development. His job is to do the business development, right? And therefore, I always used to say that our client should not waste more than 10% of his time on the finance management. The moment you exceed 30, 40%, 50%, that means you are having some issues, financial issues, which you are battling with, and then it impacts your business. Now, having said so, if financial advisor is there, and if he is a credible financial advisor, definitely it gives a lot of relief for it. Then he can actually do a lot of now. He has very rightly said, the financial advisor, if at all he has to gain the credibility, then he first need to have basic qualifications as well as some experience. Any Tom, Dick and Harry cannot just get up and say, okay, I'm a financial advisor. He must have certain basic understanding about the finance itself, the financial advisor, number one. Number two, very valid point Mr. Ajmeraji said about, you have to differentiate between the brokers and the financial advisors. Many times I have seen, if anybody is coming and presenting as a banker, we always, I personally was never uncomfortable with the financial advisors, let me tell you. Because for two things. One is, these are the people who are bringing business to us. And we in a public sector banks, we never used to that culture of marketing business. We were all actually rather dealing with the walk-in business. If somebody is bringing the business for me, and if there is a good business, why not to pick up? Right. That was always my stand, and always I used to, because his job is to get the proposal to you. Your job is to look at it properly, whether it is a credible proposal or not, whether it is a good client or not. It's your call. It's your prerogative. So one should not, blame or tarnish the entire advisory community that the advisors are like that. Okay, it's their business. They are coming, but when the advisor, the person who is coming, if he's screening the documents, or if he is camouflaging the documents, if banker is in a position to understand that, somebody who is screening, that means he is actually doing a lot of due diligence of the document. He is finding out the faults, he is finding out the lacunas in the document. He is advising before coming to the banker. If he is advising the client, okay, these are the pitfalls, or these are the drawbacks in your case, and this is how improvement is required. And then a final product, it may not be final product, but at least a bankable product if it's coming, I will say that is a financial advisor. But if somebody is a financial broker, he is very short-sighted. He is looking only for his fees, and therefore he is fudging the data. If he is camouflaging the data, and he is coming to the lenders, or even going to the investors, and presenting the case and saying that, okay, this is an excellent case, you will get good returns, it's a most secured, most this, then we should be in a position to weed out those kind of people. Now, when it comes to advisor, the question we were talking about credibility. Now, the credibility comes from, again, your track record. Just because you have the qualification, just because you have the experience, nobody is going to believe you unless you prove a track record. And therefore, if Ajmeraji, after 4 decades up in this, has established this credibility. I'm sure in initial stages, in first 10, 15 years, he must have struggled a lot to create that brand. Now, that is what actually consistency in the performance of the financial advisor also makes a lot of difference. Now, when we talk about financial advisor, there will be individuals, there are institutional financial advisors like Ajmeraji, or there are even we have seen some of the banks. State Bank of India was having their SBI caps. IDBI was having his IDBI cap. Axis Bank, ICICI Bank, all big banks normally having their project appraisal skills, and accordingly they were also taking the advisory job. There are also big fours, there are big fours who are actually advising many big corporate clients, and including the government authorities these days, because everybody needs the particular advice. So, if you ask me, the credibility will come only on a consistent performance. And when the advisor is having a long term, the advisor, when he is associated with any client for a longer duration, long term, if he is taking, because these days I will tell you, there are many startups. There are, in fact, there are many people who are actually entering into entrepreneurships, and these people definitely require some kind of advice, right from establishing their businesses to stabilizing and then expansions. Every and each step, if you are taking them along, I think definitely you will develop a credibility. Now, I spent again more than 4 decades in banking, active banking industry. Now, post retirement, I'm wearing the hat of advisor now, financial advisor. Right. Now, having got the background of a lender and having assessed so many proposals, I myself, because I spent a lot of my time in career in the credit also, so hands-on experience of credit appraisal and all. So today when I'm sitting in my office as an advisor, of course we do only large corporates more than 500 CR turnover and above. But there also I see, now I have large portfolio of clients where we are dealing with. But now when I screen the proposal, when my team is screening the proposal, and when we are actually making the proposal bankable, it gives a lot of comfort to the lenders, it gives a lot of comfort to the fund managers that from where this is coming. Now, this is what the some of the things which you can say, the credibility, how it will get developed. When you are actually taking interest, taking care of interest of all the stakeholders. When you are taking the proposal, you are taking care of interest of the lender or investor or fund manager to whom you are taking. And at the same time, if you are taking the interest of your client also, and then in the process, you are then advising both of them. Many times, I can tell you, as a banker, it's not that we are wherever's. We also need a lot of advisory. Many times we don't understand the business complications of any new project. So there, suppose if advisor is coming and explaining, okay, this is how this business model is there, or this is how this is to be seen, it is obviously, we welcome that. And as a banker, when we become experts, or when we become well-versed with all these, when we are actually listening to, or when we are learning so many points from the financial advisors, actually we cannot get these trainings only in our in-house trainings, whatever training. Now, you people also, Resurgent India also conducts a lot of trainings, but those classroom trainings is not going to give you immediately that insight unless you have live sessions with the advisors, you are handling the live cases, and after that only you can really become a good financial advisor. That's my small point I put up here.
Very nicely, sir. Cover credit worthiness or credit ability is the most important aspect. Sir, you touch very clearly by taking care of the stakeholder. If he can prove it, that is the credit worthiness. What is happening for that? So, sir, Prabhu, sir, have you any view for that, sir, regarding credibility, Mr. Prabhu? Prabhu, sir.
Sir, unmute yourself.
Prabhu ji, unmute kar lijiye, sir. You have any view for the credibility, sir? Prabhu sir, unmute कर लीजिए sir, unmute कीजिए अपना, unmute कर लीजिए sir. Prabhu sir,
क्या हो रहा है
So,
ये?
sir, I'm coming to now Shri Vyas sir. I think he is somewhat problem. So Vyas sir is presently a ED of the UCO Bank, taken charge from April 19 till date. His graduation is BE Civil, his MBA, CIB Part 1, and he's handling the risk management, corporate credit, treasury, retail, MSME, banking transactions, digital innovations. Beside that, he was field general manager with Central Bank of India before promoting as the executive director. His key roles that I've seen him in the central bank, so was convener of the state level bankers committee, Madhya Pradesh. He is a very well versed, knowledgeable man. So we are thankful to him for wherever we feel that even 1 day notice he used to come to address us. So, sir, Vyas sir, what are your thoughts about this roles of the financial advisor? Vyas sir.
Gupta ji, thank you very much for asking this nice question. I personally feel that financial advisors are, whether you like or you don't like, they are the key members in the ecosystem. Without that, nothing can move. The engine cannot move. They are part and parcel of the system. So we are confused about their roles, but I think they have a very clear-cut role. Academically, I have done, when you asked me to do some research on this, I have done some my academic research also on this. I just want to share some things.
Sir.
See, you can have three clear-cut verticals, sub-verticals of role of the financial advisor. First role is he is a strategist and a leader who can help chief executive officers and program managers providing objective advice, having to vested and key player at the executive table as a departmental financial planner, partner, and integrator. This is the first role the financial advisor plays. Second role is he steward with responsibility for the risk and financial control framework, and the scorekeeper providing performance and financial accounting and reporting that integrated financial and non-financial information. And third, he is a treasurer with responsibility of mobilizing funds, meeting all payment obligations as they arise, maintaining liquidity with the agency at a minimum cost. So basically, they are the guys who provide, because they have the domain knowledge, they have the expertise. All ministries, all department, all institutions do not have the expertise on finance matters, how to mobilize equity, how to mobilize debt, how to plan bill discounting, fundraising, equity, bonds. People don't have that. And plus they also give the perspective also how to do budgeting, how to do the planning part, how to execute the things, how to monitor the things at the field level, to bring it to a logical conclusion. Gupta ji, all these matters pertaining to the finance are all part and parcel role of the things. Ajmera ji rightly said, whether I will not agree one point on Ajmera ji. It's not only the advisory role which the financial advisor should play. They should also play a supportive role to the handling support to the company, to the government for implementation of things also. Merely advisory role will not going to serve purpose for the advisors. So we have to broaden the scope of the financial advisor. Along with the advisories, he has to work as a support officer with the organization, with the government for implementation and bringing to a logical conclusion the project which he is handling. This is what I understood from the roles and responsibilities, which I am working with so many financial advisors right now. All the four advisors are working with me. So I know exactly what sort of thing. They bring a lot of new concepts to us also.
Yes.
Kharesh Saab has rightly said that we have learned a lot of things from financial advisors, and I must admit here that all of my learning on finance has come from financial advisors.
Oh.
They will come and sit against me. I should say 100% I have learned not from my training colleges. I have learned from the financial advisors who comes to me during the course of our interaction with the advisors, we learn so many things knowingly, unknowingly. And they will come and they'll talk about bond market and make me understand how bond. Then I learned all the corporate advances through financial advisors only. They even taught me how to prepare a SEMA data also. One of the financial advisors sent one guy to me. He said 2 days with me how to prepare a SEMA data for me. And so many things. So their role is like a mentor also to us. They keep mentoring also in all new knowledge which is coming to, like a medical representative which goes to a doctor and brings new medicine, new prescription, new research. Similarly, the financial advisors, when come to the bank, he tells you the new development in the financial market. He is abreast with the new technologies, new developments in the new policies, policy issued by government of India, policy issued by the regulator. And when he discusses and tells us, sir, ये नया regulation आ गया है. Under this regulation, you can do this thing. Under co-lending, you can do this thing. New changes has come under the co-lending mechanism right now. Yes. So the role is quite big role for the financial advisors. And if there's a transparency, then probably he is the best. Like वो आपको महाभारत में जो कृष्ण की भूमिका थी ना, अर्जुन के रथ चलाने वाली, वो वाली भूमिका फाइनेंशियल एडवाइजर की.
We have recently played a very big role in the co-lending, right from RBI to the banks. Yeah. And let me tell you, one of the bank which is comparatively small, PSU Bank, has done phenomenal progress in the co-lending space, and that client, 2 of them are ours only. Okay. So you are right, because we also are very closely in touch with RBI, the SBI. We talk to you about the interest rate, what is going on, what are the compulsions, even on the CP, the kind of war which is going on, the interest, even, so you rightly said that because we have to also keep ourselves fully abreast, and with our qualification, our experience, our knowledge, and handling so many clients and so many different banks, we can definitely contribute a lot, sir.
Thank you.
Offline, I'll talk to you, sir. Ajmera ji, offline, I'll talk to you.
Sure.
Sir, Vyasa, you expressed very nicely. What is the role of the financial advisor should be there? It is a bridge between the customer and the banker, even the regulator also, sir.
Yes.
That is the most important thing. I understand that one of the 2 banks, they engaged us to give a training for a restructuring, how the bank should go for a restructuring of their loan accounts. So that respect, we have given about 5 days training to their top executives of the banks. I think this financial advisor can have a bridge between the bankers, between the customer, and between the regulator also. I think this is the most important aspect. Now, sir, I am coming to respected our Disham Pitama, sir, our mentor Sri Kishore Krat, sir. Kishore Krat is former MD, CEO, Indian Bank, IDBI Bank. BCom honors, LLB, CIB, MBA, Diploma in Computer Application in Banking. Having 41-year rich professional banking experience, out of his 7 years in foreign countries, United Arab Emirates, UAE, and with the board level experience of 14 organizations and more than 6-year whole time director, including MD, CEO, 3 banks, 2 prime public sector banks, and 1 foreign subsidiary of large public sector bank. Managing Director and CEO of Indian Bank for a short period of 16 months, guided by the bank to emerge as India's best bank. I know the period of Indian Bank when the Indian Bank was the only bank for showing the profit and considered to be a topmost bank of the banking sector. And by the Indian Bank, they got a merge of other banks also. Under his leadership, he had done an excellent job. He also served in various banks boards. So board, either you are talk about the IDBI Capital Market Trustee, Asset Management, Intech, Executive Trustee, IDBI, Federal Life, Chairman, Corporate, CDR, Executive Groups, Director, Association of Development Financing, and so many. I think when I'm reading his biodata, it will take much time. So he was also President Governing Council, Enterprise Development Institute of India, Executive Director of Union Bank of India, MD and CEO of Baroda Limited, West Indies. Member of the Advisory Insurance Regulatory and Development Authority, member of RBI Subcommittee on Financial Service. Present engagement advisor of 24 Exchange, a joint venture of Standard Chartered Bank established in USA as a forex derivatives exchange platform, advisor to Swadeshi Organization of India Business Development, board member of ALAT. So not when I'm reading his biodata, really, so I have no word such he given us time, sir. So we cannot express our gratitude more than that. Sir, some issue I think you have explained very rightly. What are the issues being faced and credibility, other things you have already touched up. So, sir, what do you feel that financial role of the financial advisor, as we already discussed, is important for the banking sector or regulator sector? How a advisor can play roles to streamline the, you can say, regulation from the Reserve Bank of India? Sir, have any views on that respect, sir?
Yeah, certainly. Actually, financial advisor, if you see, even though they are the part of the ecosystem, or there is no formal arrangement to actually recognize them on the platform of the regulatory or statutory bodies.
Sir.
That is my first observation. You have now created this association of financial advisors. Going ahead, perhaps you can raise some voices, and then once you get the recognition, then definitely the advices which are given on the regulatory fronts may be incorporated. That is actually very much important today because one thing, all the financial institutions and India particularly during last 5 years, I can say we are going through upheavals. Our economy is also, going up and down, but because of the resilience in the economy and the proactive steps taken by the government of India, we are actually coming back again and again on a strong footing. But still the challenges which are there in the financial ecosystem, economic ecosystem are continuing and it cannot be addressed. Now, why that is happening? I will say this is exactly the gap between the financial players, when I'm saying financial players, all these people who are actually part of this, our economic system, individuals right up to the large corporates, because whatever transactional things these people are doing, insofar as economic activities are concerned, it has a financial impact on them also on the support system. Now, so when I am talking about support system, all the financial institutions, whether they are lenders, whether they are investors, whether they are equity holders, all these people, when they are supporting these economic activities, I think everybody is not well versed. I'm talking about people who are using the funds, people who are actually in the economic, transactional economy. So, when we already spoke about the advisory role and the importance of the advisors in this, if advisors are giving proper advice, now recently we have seen during this pandemic again, so many challenges were thrown, and particularly to the entrepreneurs, a lot of challenges had come. Many of the countries' economies have actually shattered. Our economy also, you must have seen the GDP growth, the way it has declined because of this prolonged pandemic. These are the challenges. In these challenges, if you don't have proper financial advisor, then survival becomes very difficult. I will tell you, I am also an advisor to the very tiny entrepreneurs through Bharati Yuva Shakti Trust platform. There, the 5 lakh, 10 lakh rupee entrepreneurs actually, this BYST is actually mentoring them. The point here is, the moment you have financial advisor as a mentor, when he's standing behind you as a mentor, obviously he is going to guide you and he is going to actually sail you through the difficult times. Okay. Now, how does it? Recognition from the regulator is required here. in the absence of this kind of credible guidance, all the institutions or all the borrowers or all the fund users, there is every chance that they will not be able to meet the challenging times properly and they may falter. The economy has recently seen, banking industry has recently seen the kind of, stress all the financial, all the rather borrow accounts we are going through. Now, wherever there is a stress, obviously, as I said earlier, the time allocation for the stress management, financial stress management, if it is more than 50-60%, then obviously person is not in a position to concentrate on his business. So it is a dual impact. On one side, you are not in a position to focus on your business. On the other side, you are not able to do the financial management. In such situation, when the financial advisor takes care of the financial management and gives him a time for the business development or to deal with the business front challenges, I think that combination will always work. Now, this contribution of the financial advisors need a recognition at all levels, at government level as well as the regulatory level, and therefore, imbibing them or involving them in this ecosystem of the financial ecosystem is a need of the hour for us today. As earlier, my colleague bankers were also saying that we normally don't like financial advisors to come and present. Many times we say, okay, let the owner or let the promoters only come and discuss with us. But promoters are mostly, they don't have knowledge about the financial management. So therefore, their dependence is much on the financial advisors. In that scenario, if my exposure on a particular borrower is actually getting secured from the good advice of the advisor, then I must recognize his presence in my arrangement. And therefore, there is no bar on writing in our appraisal systems also. I don't know, we get scared as a bankers to write that this was brought by so and so. Ajmeraji said that he was actually, or his organization is getting roped into the communication from the lenders. I'll tell you now, as an advisor, when we are also going to any of the organizations, we are very boldly writing that we are the advisors for this proposal, we are the advisors for this project, and we are going to handle it. We are actually organizing the meetings, and these days, because of the pandemic, mostly meetings are happening on the web meetings are happening either on Zoom or Microsoft Teams. But there, we are organizing the meetings. We are actually organizing the discussions of both sides, corporates also and the lenders also. And I'll tell you, this kind of arrangement, when they are there, obviously, two things will happen. One, that you are recognizing the role of the financial advisor. And as I said, it is a high time that our financial institution recognize that role. Once you recognize the role of the financial advisor, obviously you will start involving them in all kind of deliberations. And their responsibility also can be then fixed, because once you are documented within your appraisal system, within your records that so and so is there, obviously you have access to go back to him. You look here, we need your help here, because it's a as I said, financial advisor is supposed to take care of everybody's interest. So the role of financial advisory need to be recognized at the regulator level also, because many times I have seen that there are apprehensions about the regulators also, whether regulators will like it or not. But our regulators, if they were, let's say they were objecting for this, they would not have encouraged SBI Cap, IDBI Cap, Axis Bank, ICICI Bank. So many institutional advisors are there, and many times their contributions are recognized. One or two accounts will fail. It doesn't mean that, because everybody, these are all, whatever we do, whatever we advices we give, those are depending on certain assumptions. If the assumptions fail, either because of the inherent weaknesses which we had not noticed, or external reasons where it is beyond the control of anyone, those failures will always be there. If always we say advisor has to give advice and 100% success only they should be there, it will never happen. But unfortunately, what has happened in our country so far, that we have got that impression that whenever advisor is involved, there is mostly chance that it may fail because advisors are having their vested interest. It's not like that. Advisor will not have vested interest. Now today, suppose if I am doing advisory, I have passed my age of earning money. Today I don't need money. Today I am doing as a hobby. Otherwise, last 4.5 decades experience, whatever I have gained, expertise, whatever I have gained, if I don't use that for the betterment of our financial system, then it will go in vain, right? So it's not that every advisor is having vested interest. No, there are many advisors. There are many advisors like Ajmeraji. If he has been in the industry for 4.5 decades and getting recognized, that means they have proved themselves. I think once we, the users of the uh, this advisory system, once they develop that confidence, obviously these advisory systems will get its footing in our ecosystem. And it is high time that Government of India, state governments, as well as regulators. And when I am saying regulator, it is a regulator of capital market, regulator of financial market, regulator of the cooperative sector. Everyone need to understand what is the role of financial advisor, and if it is judiciously used, judiciously taken care of, I think it will strengthen the financial ecosystem and not weaken the financial ecosystem.
Thank you very much, sir. I think you have summarized the things
Yeah,
very,
yeah.
very clearly. And you also tell that at present we don't require money. Your experience, I speaks yourself, sir. Because I remember that one or two webinar when I called, everybody asking that कहाँ है सर कराट सर कहाँ है उनको बुलाइए आप. I think your experience tell the things, and you also give a guru mantra about the mentor, the advisors. Financial advisor can work as a mentor. I think this is the most important thing. Another thing you are talking about the recognition of the financial advisor. If it can be done, I think our financial system can be improved. Even the NPA level, other thing what we are talking about, monitoring aspects can also be strengthened, and you can say the banker are benefited. So now I'm coming to Shri Ramesh Prabhu. He BCom, FCA, CIE, SA, USA. He is a partner with RS Prabhu and associate, promoter director of Swagat Housing Finance Company Limited since 1996. He is a regular faculty of Institute of Chartered Accountants, IC, SI, Government Department, Media Houses, Crede also. He has author of 5 books on real estate, Regulation and Development Act 2016. And one of the book has forwarded message from Shri Gautam Chatterjee, Chairman, Maharera. And CA, Mr. Ramesh, has practically in-depth knowledge of cooperative housing sector and is author of 40 books on the issue like conveyance, transfer of flats, parking collection of dues from the member. He is editor of MSWA Housing Societies review having circulation of 50,000 copies. He has appointed by the government of Maharashtra on its committee for drafting of law and deemed conveyance. I think he's the right person to talk about the final role of the financial advisor. Sir, you are also regular interviewed with a number of TV channels such as Magic Bricks, ND CNBC, Awaz, G Business, almost all the Marathi channel, including Doordarshan, and writer and contributor in number of newspaper like Times of India, DNA, Afternoon, and Midday. I think you are the right person to ask about the real estate. Sir, what is my question is post implementation of the Real Estate Regulation and Development Act 2016, how financial discipline has improved in real estate and how the financial advisor played these roles. To hand over to Mr. Prabhu.
Yeah, thank you, KK Gupta ji, for inviting me. In fact, I have been listening about the role of financial advisor. Now, this financial advisor role, in order to have a credibility or in order to have the recognition, naturally it has to be regulated and it has to be recognized. This is what has been said by Mr. Ajay Vyas as well as Mr. Kishore Karan. And I'm also of that view. Unless until there is some regulatory mechanism system, nothing works. So in the real estate also, if you remember, since independence or even prior to independence till 2016, there was no regulator. When there was no regulator, there was no financial advisor to regulate real estate. But in the Real Estate Regulation and Development Act, now the chartered accountants have been made as a recognized financial advisor. In order to regulate the money which is received from the allottees, how that money has to be regulated, how it can be withdrawn, what purpose it can be withdrawn, entire financial discipline through a chartered accountant who is also getting regulated through the regulatory mechanism. In case he does something wrong, a disciplinary mechanism is set up. And therefore, one has to be very careful. Now, I'll put it in a right perspective. People used to divert the money. If the money is getting diverted, siphoned off, the allottees do not get the money, or rather, they will not get the flat which they have booked for. Similarly, in the case of a real estate, now being a regulator is there, or rather a financial advisor, that is a chartered accountant is there. Along with him, there is a architect and engineer who will regulate the money which is getting from the allottees. So in the case of a financial advisor, in the case of a banking, in the case of a proposer, what I say is the way we have an insolvency professional who is getting regulated and monitored, and then under the IBC, same way, Reserve Bank may have to come out with a regulatory system to enroll the financial advisor, giving them the role, recognition, experience, qualification required, and then naturally the money that is getting flowed, that is getting sanctioned for a particular project, that financial advisor role should not be there only till the money is sanctioned. It has to further get percolated, and where the money is getting used, how it is getting regulated, that person should be there in that financial advisor should be there as one of the financial director in the company, maybe a part-time CFO. So if this type of regulation come, a recognition come. Now today chartered accountants are getting a recognition. Why? Because there is an Institute of Chartered Accountant of India who is going through the curriculum. Then they are giving a certificate of practice, and those chartered accountant certificates has its own value, and that is recognized in the Income Tax Act, GST, or in the various banking system. Similarly, financial advisor regulatory system is the most important thing. Now the real estate, we have a financial advisor which is recognized by the RERA. Similar thing need to be done by the RBI. That is what I can only tell you, sir.
Sir, what in your views are under the RERA or your regulations? There is some flaw which you feel that it should be rectified, and especially regarding to its financial aspects.
That's correct. Sir, what has happened in the case of a RERA is a central act. But unfortunately, the implementation has been given to the respective states. Now, each states have been making their own regulatory mechanism to regulate this 70% of the money which is issued from the allottees, which I said. Now, I will tell you, now this regulatory system, in fact, if the money is to be utilized through a particular mechanism, then that chartered accountant who is going to certify should be empaneled, he should be imparted training, he should be empaneled with the what is called as a respective regulatory authority. Then only those people should be allowed to give the certificate. Now, any dormant decree chartered accountant comes and gives the certificate of withdrawal, and the money gets siphoned. So, the proper regulatory system which is required in the RERA is not there. I think the RERA should empanel the chartered accountants who have got experience, who understands about the real estate mechanism, and they are also, the way I was saying, similar mechanism should be put by respective RERA states. But when I see that different states are allowing different type of systems, different type of certificate format, different type of audit mechanism, and that is where a lot of confusions are still there. Money is not getting regulated the way it is required to be done. That flow need to be plugged by maybe the central government by making some changes in the RERA itself.
So that in your view, that a recognition of the financial advisor by the regulator or by the government is a must.
Absolutely.
Understand what you're feeling is, and why you can say recognizing the financial advisors, so it can be managed better. While for
That's
you,
correct.
real estate can be managed very better. I think
That's
this
correct.
is a nutshell you are talking about.
That's correct.
So now I coming to Shri Krat sir. Krat sir, I want a last word for the participants. What do you want to give a message to the financial advisors? Because financial advisor, our member is more than 300 members are there. They are listening to you in different platform, whether you talk about the YouTube or Facebook or some other channels, they are also listening to you. What your advice can be to them, sir? Being as having such a experienced banker, so sir, you can give some advice to these people. Right, sir.
Yeah, certainly, Gupta ji. In fact, we have been talking, and a lot of advisory themselves, they must have taken out of all these deliberation. First of all, first and foremost is establishing the credibility. Number one, because that is how the advisory community is going to get recognition. Because we always say that one person makes the difference. But insofar as building the credibility is concerned, the community actually has to actually move on to a credible platform. Then only it makes difference. Otherwise, one person who is not a credible, he can spoil the image of the entire community. And here, therefore, I'm saying every advisor has to understand one thing: his role, that he has to differentiate himself. Rather, I will say, he has to keep himself away from the community of brokers. The moment you step in as a broker, you are short-sighted, and then your credibility obviously will never get built. You will earn money in a short time, but your credibility is lost. And credibility is such a thing that you cannot put any price tag on that. That is number one. So build your credibility very much. Secondly, the recognition of the advisors have of late started coming in the financial world, as just now one speaker said just before me, that in IBC there is a resolution professional. Now, when through IBC platform, we are actually dependent more on the resolution professionals, because the system, the IBC ecosystem believes that resolution professional will actually give a proper advice and bring out that particular account. Now, this is because this is coming through IBC platform, we are getting the recognition. But similarly, as I said earlier, if my finance, rather entire finance of the ecosystem is actually dependent on good advices, then it is better that we recognize those advisors. I will simply say, because we are going through the pandemic and almost every alternate person is taking a lot of antibiotics. The regulator also is giving a lot of antibiotics to people who are going through stress, right? I will say, if they are giving antibiotics, how the doctors are giving, the doctors normally don't give only antibiotics. They also give supplemental tonics like BCLAC or something, so that the antibiotic impact is reduced. So the advisor can work as a tonics, the advisor can work as a supplement to strengthen the ecosystem, so that the antibiotic impact of the antibiotic is actually then goes into a positive way. So therefore, there is a lot the advisor can do. We have been doing this work for ages. In fact, advisors are not only now, advisors are there in every country, in our country also for ages. The time has come for the recognition, and this is the right time, I will say, because when everybody is going through the difficult time, normally we always say, no, the inventions are taking place only when their need arises. Now there is a need, everybody feels that need, that somebody should be there for my handholding. Somebody should come and guide me. Okay, this is the challenge. This is how you can overcome the challenge. And there, the advisors, credible advisors can step in. Our job is not only to make money. Our job is always should be to secure the interest of the this entire ecosystem. If our economy is strengthened by our advisors, we should feel proud about that. Yes, there are challenges in the economy, and I'm using my expertise to get over those challenges and then support my economy. If our economy is supported by all of us, by good advisors, and taking care of the difficult time, I'm sure the quality of our assets, the quality of our growth definitely will be much better. And there, our role is very, very important. I think these are the few advices from my side. Otherwise, there are other experts. They can also come.
Very nicely, sir. You have covered everything for that. So, sir, Mr. Prabhu, we have one question for you. So, Sri Ghanshyam Kaushik ji is asking you, please share contact detail. What is your opinion on executions of RERA decree and time taken in realization the money after RERA decree in delay in execution? Whether the home buyer should HO for RERA or IBC for recovery resolutions? Sir, what is your opinion, sir, in that respect, Mr. Prabhu?
Yeah, RERA has its own setup, implementing its own order.
Sir.
No doubt, the RERA decrees are referred to the district collector, that is called district, revenue department, wherein the amount is recorded as areas of land revenue. Now, as we understand, when the implementation comes with the district collector, he is engrossed with so many other matters, so he does not give the required priority. What we need to do is, once it goes to the collector by way of execution of the order, then we have to immediately move to the Honorable High Court and get the decree implemented, wherein Honorable High Court gives the time frame within 3 to 6 months the order should be implemented. That is how maximum RERA orders are getting implemented. I'm not saying that the RERA orders are not implementable. They are very difficult to implement. No, they are easy to implement, and a lot of people have got the recovery. Now, if I have to talk about the difference between the IBC, that is a resolution plan, with versus RERA, in case you as one of the allottees now cannot go with the IBC, you need minimum 10% of the total allotee should come together. And as the insolvency and bankruptcy code is not to recover your stuck money, insolvency bankruptcy code is to give a resolution plan for a project. And therefore, if at all you are a one allottee, you cannot go to IBC. That is barred. There is an amendment which has been carried away. If you have more than 10% of the allottees or more than 100 allottees who are able to come together, form an association, and you think that only getting the money is only the solution with a haircut, then go with the IBC. Otherwise, RERA is one of the best mechanism wherein you can go and get your money, whatever you have invested, with the interest in the due process of law.
Very nicely, Prabhu sir. Very nicely you have covered. Have any last words, sir, to our financial advisor who are listening to you? Have any question from your side?
No, I would only say, as Mr. Kishore Karat and as well as Mr. Ajay Vyas, as well as Ashok Ajmera, whatever they have said, we have to build the credibility. It does not come overnight. Slowly and steadily, without compromising with the short-term gain. If at all we are looking at a long-term gain, and specialization is the era today. You cannot be doing everything. You are not doing a general practice today. Just to give you an example, I am only looking after housing society and real estate. Now there are some people who are only looking after financial thing. If at all they take this as their bread and butter, they have to be loyal to them. They have to be loyal to their client, loyal to the people who are facilitating this, credibility. That is the only thing. It comes over the period of time.
Very nicely, sir. Ajmera sir. Sir, you want to say something, sir, to advise to your colleagues?
I think Karat Saab and Ramesh ji have summed up it so well. I would only repeat in just less than a minute that most important is credibility. Secondly, be focused on that particular job. Check your capacity. Take the projects or take the assignments in hand only to the extent you can do yourself with your qualified team. and not otherwise as a crowd to do everything and anything. You have to be very, very clear about that. Don't enter into those kind of undercutting or those kind of short-term measures, which spoils the whole profession. So these are the things which one has to keep it in mind to become a successful financial advisor. Karat Saab has really put it so well because he has seen from the whole of his life, from the banking side, from the other side, and now he's looking even from the other side of the table also. And he has very nicely explained to all of us that what important is the role of a financial advisor. And like in everything, an expert, we are an expert. We have to be qualified. We have to be experienced. We have to have ethics. We have to take the work only to the extent we can execute it properly, getting ourselves involved because it's a physical job. It's not a machine which is producing the products. It is your brain, your time is involved. So take the work only to the extent you can deliver it, just not to get into anything and everything, and be specialized in your job.
Thank
All
you.
the best to all the financial advisors. And with Guptaji's help, we will definitely get one day the recognition to this profession. Now Karat Saab is also there, and Ajay ji has also endorsed this idea of credible financial advisor.
Thank you very much, sir. Ajay sir, Vyas sir is there? Vyas sir? So I think he left. Lekin I have at the end, on behalf of the Research in India, because Research in India has taken an initiative to form these associations. And our main object of the association is to recognize by the IBA, by the, you can say, by the government and regulator also, so that we can be useful for the government, for the dream of our honorable Prime Minister to achieve a 5 trillion economy within a period of 5 years. I think this is the main object for that. Research in India is a merchant banker, and we are also conducting technical viability study, debt syndication, private equity, everything. We are in solvency, we are also doing it. So these are the aspects. At the end, I am thankful to respected Karat sir, who has given well, I think, important tips to us. He always mentored to us. He always obliging us. And I think all the participants must be benefited by his views point. So I have no word to express my gratitude toward Shri Kishore Kharat sir for such a lovely presentations for him. So I'm also thankful to Shri Ashok Ajmera sir, who has a vast experience in the field of the financial aspect. I am very happy to learn that about 500 accounts, not even a single account slipped to into a NPA category. I think
No, Guptaji, I am not saying NPA category. What I'm saying is not a willful defaulter.
No, willful.
See, NPA, so of course, it's a, like Karat Saab also explained,
No, I will rectify myself. That is a willful defaulter. So I think this is a highest. I must salute such a important aspect of 45-year career in the banking sector to helping the bankers. Even State Bank, I've seen his so many webinars also. So where even MD of the State Bank of India was appreciating him like anything, because he was the only one person. While the result of declaring by the State Bank of India, he giving the comments on his financial position also. I think, and during the, I think the budget also, he's you can see him. My budget is his interaction with the public. What is the budget proposition on? I think first or second, he will give his viewpoint on the budget also. I must salute him for his sparing his time. I am also thankful to Sri Ajay Vyas. I think I have no word to express my gratitude toward him also, because by a short notice, so he never say no to me at least, because he was with me, with us in Central Bank of India. I was also General Manager of Central Bank, so he was also with us. I am really thankful to him for sparing his time, and he given very blunt opinion for his financial advisor also. For I must appreciate him. So above all, Mr. Ramesh Prabhu, who is a, you can say he is a chairman of Maharashtra Society Welfare Associations. and doing so much work for the RERA. And his viewpoint is also very much clear with how the financial advisor can help to us. I think major aspects, what crowds are telling, our credibility and recognitions. I think these are the two crux of this webinars for that. So with this word, I express my gratitude to all the eminent speaker. I think today speaker are very, very important. I think participant must be happy to listen to these peoples. So at the end, I express my again gratitude toward all the speakers, all the participants, even my team, resurgent team, who manage this webinar very nicely and keep us comfortable in conducting these webinars. I'm thankful to Rohan and his team for such a excellent program for that. Thank you very much. With this, I close this session. Thank you very much, sir, to everyone. Thank you.
Thank you, Guptaji. Thank you for wonderfully hosting this. You are always a very wonderful host, very knowledgeable, and the topics which you pick up always, you and Resurgent India, I really always admire that very chosen topics are always taken, which are useful for many professionals, and in particularly in the financial world. So once again, congratulations to you
Thank you, sir.
and Resurgent India for excellent webinar for organizing this excellent webinar today. Thank you so much.
Thank you, sir. Thank you very much.
Thank you, Guptaji. Thank you.
Thank you, sir. Thank you,
We
Prabhuji.
enjoyed,
Thank you, sir.
we enjoyed the session.
Thank you, sir. Thank you. I'm really obliged, sir. No problem.
So you all join the budget meetings on first and second.
Definitely, sir. I joined it. If you can send me link, I will join. Thank you, sir.